crude's down on global growth concerns. Whenever there's issues about economics or slowing growth in China, crude ends up selling off. It's not really down a lot. Anything above 50, you can't trade this yet. In fact, we are now back in that range that we were stuck in November, when it was rattling between 50 and 54. We now have to trigger either above that pivot point for a breakout, Matt. 55 is where I would have it.
Yeah.
Or sell below 50. Until then, there's nothing here. This is the classic K trade, by the way.
Oh yeah, below 50, above 55. Yeah, that is a classic K trade. It's when you're anticipating strong movement one way or the other on a breakout, right? You got an order to sell underneath 50, you got an order to buy above 55. I was asked a question by one of our great team members, community members, if this was an opportunity now that crude is kind of coming back into that neutrality, should we start selling naked puts again? And I want to get your take on that. I'll tell you my response, but I do want to get your take on that.
I would not sell against real pressure underneath 50. No, I would not. Now, if it was down to 42 and slowing momentum, could you justify selling naked puts to take ownership on USO? Yes, I could. Yes. But a trigger at 50, Matt, I think you've got at least $4 or $5 down. So I don't know why I would want to sell on that weakness. I would probably wait for some kind of momentum signal down on a double bottom or something like that.
Okay. My response is very simple. On USO, absolutely, if you're willing to take possession of oil, right? So if I'm looking at USO here, T, and obviously we're going to be looking at a very similar pattern there, but when I'm looking at USO here, and let's say I want to take possession at $10, right? I would have no problem with somebody coming to the market and saying, you know what, let's go ahead and drop that down. Let's go ahead and sell a, 24 delta, $10 put option, get paid $20 to play, $20, you're looking at about a 14% ROI there projected. You take possession at $10, you start writing covered calls, you own it for a very long time. I have no problem with that. But if you're selling naked puts on crude oil right now, I think you're being too aggressive because you're not looking to take, it's such a different philosophy with those two trades, Tim. When you sell naked put on USO, you're willing to take possession of the shares, right? When you sell a naked put on crude oil, you're not willing to take possession of 55-gallon barrels of oil, right? And I say that jokingly, but you're not buying the shares in the futures market is my point. You're doing it for simple cash flow reasons. Well, if you see a breakdown out of 50, Tim, I don't care what delta you have, that's at risk. Even though you have support at 46 to 47, even though you have support at 42 to 43, even though you have support at 37, even though you can go all the way out to the market and sell, 5 delta contracts at $35 a barrel. To me, that's still not worth it because we know if the market breaks 50 on crude oil, your margin's going to expand ridiculous. You're going to show a loss. You're going to have emotional concerns. I just don't think that's worth it. I just don't. So what my response was I'm not going to sell a naked put until I see a breakout. I treat naked puts on crude oil like directional trades, Tim. That's how I treat them.
Yep.
On USO, you can do it to take possession. On crude oil, you got to treat it like a swing trade.